So grateful to everyone. Good afternoon and welcome. Thanks for coming and for joining us in this second session of the Rebuilding Democracy in Venezuela webinar series, which is hosted by the Democracy Action Lab and at CDDRL at the Center on Democracy Development and the Rule of Law here at Stanford University. As you know, this series examines Venezuela's uncertain transition through four key dimensions: the political dimension, the economic dimension, security, and justice. It is still hard to talk about that transition. I guess we'll have to see in a couple of months or years to see if this was really a transitional moment. But most of us are very hopeful and enthusiastic about the future. In our first session, we explored the political challenges of what a full transition entails. And today we're going to turn to the economic dimension and see how the economic and political dimensions interact to produce a result. And we've titled this, the title of this session is Economic Stabilization and Recovery. As you all also know, I'm not going to spend too much time on this, but Venezuela begins a new chapter marked by Maduro's removal. And after one of the deepest economic collapses recorded outside of war, over the past decade, the country lost around 80% of its economic output and experienced years of hyperinflation and millions of citizens leaving the country in search of opportunities and security. But economic recovery, as you also know, is not simply a technical matter of macroeconomic policy. It is deeply tied to political stability, to institutional credibility, and to governance capacity. Investors, international partners, and Venezuelan citizens are all asking some very fundamental questions related to what this new moment brings for the economy, and those questions are: how quickly can the economy really stabilize? What role can the oil sector realistically play in recovery? How can the country attract investment in other sectors? What are the policies required to rebuild a functioning and inclusive economy? But I guess that one of the most important questions today, seeing how how the remnants of the regime are pleasing the U.S., is can the economy stabilized under autocratic rule? I think most people agree that it could, but the next question is, can it recover? Today, we're fortunate to be joined by three outstanding experts who bring very complementary perspectives on Venezuela's economic future. I'm pleased to introduce Francisco Monaldi, who is a fellow in Latin American in Latin American energy policy at the Rice University's Baker Institute and director of its Latin American energy program. Francisco is one of the leading scholars on political economy of oil and energy in Venezuela and across the region. And today he's going to help us understand a bit better the role of the oil sector in supporting recovery and what's necessary to increase production sustainably. Luisa Palacios, adjunct professor at Columbia's University School of International and Public Affairs, also a widely respected expert on energy markets and energy finance. Luisa is going to navigate us and offer insights on the financial and policy frameworks required to mobilize investment, the investments that Venezuela energy sector urgently needs. And finally, we have the pleasure of having Sari Levy, who is a research scientist at the Adam Smith Center for Economic Freedom at Florida International University, former dean of the Economic and Social Sciences Faculty of the Central University of Venezuela, and a member of the Venezuelan National Academy for Economic Sciences. Sari is going to focus on development, is going to focus on how to attract investment and fostering growth beyond the oil sector. And without further ado, because this introduction has been too long already, I'm gonna give the floor to Francisco. Thank you, Francisco, for joining us.
Thank you very much, Hector. It's a pleasure to be with you. Thank you for the invitation to Stanford CDDRL, and great to share with Sari and Risa, who are old friends of mine. I will share some slides, and you can see them, right?
Yes.
Okay, and try to answer some of the questions that you were raising. So just a perspective of the history of the sector very quickly. You know, Venezuela has been in the past one of the leading oil exporters of the world between the 1930s and late 60s. As you can see, there was a long period of growth in the oil sector until it started to decline in 1970, largely by a combination of factors that no more concessions were given. They didn't renew the concessions, so the companies had a sort of a limited horizon, and they started to disinvest and not explore. And also taxes were significantly raised. So companies stopped investing as much as they did in Venezuela before, moved a lot of their investments to the Middle East, and then nationalization happened. But after already the sector, as you can see, had declined very significantly. And then even though PDVSA, the national company, was a well-managed company, it was a very smooth transition. OPEC quotas after the collapse of the price of oil in the early 80s limited the country's capacity to grow the oil sector. But then after the Saudis basically eliminated the oil quotas in 1986, there was a recovery that initially was done by PDVSA, but then largely by the oil opening that the government of Rafael Caldera implemented. And that actually most of the barrels coming out of that investment ended up being produced during Hugo Chávez's tenure in power. And that's one of the things that makes the analysis of this period confusing, because the national company PDVSA, as we will see in a second, collapsed since Chávez fired about 18,000 employees and made it into a political tool. But the country didn't notice how dramatic the collapse had been, because the 1.1 million barrels coming from the investments by the private sector in the oil opening hid the degree to which the national company was being completely decimated. In addition, of course, the price of oil, Chávez was super lucky and the price of oil dramatically increased. So we had a period of bonanza despite the oil industry collapsing. And eventually you can see there that US sanctions in 2019, initially 17, some financials, but then oil sanctions in 1919 also had an additional impact, and of course, COVID. And there has been some recovery, more recently led significantly by Chevron, who got a completely different type of contract with PDVSA that allowed it to control their project and their cash flow, and also receive, of course, a US license. And that's about half of the recovery that you see at the end is Chevron. The previous one was just reopening production that was closed because of COVID. And here you can see what I was just explaining. The counterfactual would be that Venezuela, with the Chávez policies, would be producing close to between 4 and 5 million barrels of oil. It is producing one, a little bit less than one. And you can see that all OPEC countries basically increased production during this period with a couple of exceptions. But PDVSA, basically, Venezuela lost a tremendous market share. But as I mentioned, the most of the collapse occurred in the national oil company. So, of course, the world has changed dramatically for the Venezuelan oil industry and many other areas in the country after the recent event. Exports were collapsing in December because of the US blockade. And of course, they were also closing production, and that lasted had effects even until January. But exports are recovering now, and the shift in the destinies of oil is very dramatic. 80% used to be exported to the black market. Now we have 100% to licensed destinies, and most of it for now to the US, a little bit to Asia and Europe. But most of the oil is likely to come to the Gulf Coast of the United States in the next few months. The revenues will be controlled by the U.S. government, and it's unclear exactly how they will be dispersed. So far, there has been some pragmatism, and they have been sent to Venezuela to exchange in domestic banks, and PDVSA receives just bolivars. In the short term, what we will see is that the incumbents, the companies that are already there and already have a contract and already have an expansion plan, basically Chevron, Repsol, Morel, and Prom, and Eni, will be the ones adding barrels in the near future. And there is a question mark that I will discuss in a second about the new type of contracts, the so-called production sharing contracts, that were allocated to not necessarily the most adequate operators, and that's one of the issues of contention that the U.S. is dealing with. Conoco and Exxon so far are unlikely to make major investments. They are owed a ton of money, and I think it's important to realize that the easy, low-hanging fruit investments can happen with the transitional regime that we have now, but very unlikely that we will get the significant long-term investments that require the country, which are above $100 billion and will require a decade of growth. Here you can see the recent behavior of the production according to official figures and according to OPEC secondary sources. And as you can see, some growth initially. That's the reopening of the oil production that I mentioned, then a stagnation until Chevron receives the license, and then recent decline. But as I said, that's recovering. So, but look at sort of a photo or an approximate photo of how production is today distributed. Basically, we have Chevron as the largest player. I mean, of course, PDVSA is formally the largest player. I will talk that in a second, but Chevron, the largest foreign investor with about a quarter of Venezuela's production, then the Russian and the Chinese national companies, between the two, around 22%, then the Europeans, about 7%. Those are the so-called joint ventures, which were the only form of investment by private sector actors that the law that Chavez approved allowed. But in the last couple of years, with Delcy Rodriguez at the helm of the Ministry of Oil, they gave about, now she mentions 31 contracts to actors that were completely opaque, the assignment of these contracts, and mostly to actors that are either local, connected to the government, or companies from countries that were willing to operate in the black market. And so these are not necessarily, of course, the type of operator and investments that the United States would like in Venezuela, not only because of their capacity to invest and develop these fields, but because of other reasons of their nation of origin, or some are even sanctioned. So that's a big concern, because notice that 21% of the production is in this type of so-called CPPs contracts. So PDVSA today is producing about the same as Chevron, about a quarter. 21% is being produced by these CPPs of the production that is nominally in the hands of PDVSA. But if you add the 21% in the CPPs plus the Russian and the Chinese, basically you have that more than 40% of Venezuela's production is allocated to actors that are not necessarily the ones that the U.S. wants to operate those projects. Here you can see that there is a large chunk of Venezuela's reserves, and these are two different consultancies, Woodmac and Welligence, estimating that the largest holders of reserves besides Chevron are the Russians and the Chinese. So that is one of the questions to be solved. In terms of the prospects for growth, this is Rystad's sort of projection of Venezuela's oil production. You can see that before the removal of Maduro, they had a base case scenario of decline, and now they have, of course, a very significant increase. But the first part, which is the getting to say 2028 to sort of the Trump administration, is the growth in the so-called brownfields, the fields that already have all the infrastructure and some of these incumbent companies that I mentioned. This is sort of the easy, low-hanging fruit, short cycle kind of investments. But if you see, it takes, after that fast recovery, it takes much longer to add the barrels later on. But in particular, notice here that it takes much more money. The keeping Venezuela's production, this is over a 15-year period, keeping Venezuela's production on about 1 million barrels requires $53 billion over all this period. Adding to 1.4, about 14, but then you can see that as you move to the areas that do not have the infrastructure, you require much more investment. And this is the type of investment to get to 2 million barrels or 3 million barrels that is not going to happen without solid foundations. And so very quickly here, I just want to talk about the law. The law legalizes the Chevron model contract that the government gave Chevron and that then Repsol and Morel and Pron received. But the model is a tremendous improvement from previous models of JVs, but it still requires PDVSA to be 51% of the production. It legalizes this new type of production sharing contracts. It reduces or allows for a significant reduction of the tax burden of the government take to zero on gross revenues and even reducing the income tax. This is, of course, welcome in the sense that Venezuela had a too high of a government take, but the range that the law offers from 0 to 45% of gross revenue and from 34 to 50% of income tax opens a tremendous discretionality for the Minister of Oil. And that is something that, of course, is very concerning. And even if at the level of the contract, these things are set, the question is, how do the government, the Minister of Oil, decide which company gets which tax rates? This is, opens up a kind of worms of potential corruption, et cetera, unless it's properly implemented. But there are no institutions or no checks and balances except the US government to get that to be done properly. I will not go into much other details, just to say that the CPPs, the so-called production sharing agreements, were legalized by this law, and they claimed that all the 31 were legal because of this, but Bloomberg and Reuters have reported that this is being reviewed by the US government. So this transitional framework, as I mentioned, does allow for some recovery, potentially to 1.4 to 1.5 million barrels, but this is not the framework for the sustained long-term investments that the country needs. And finally, I just wanted to do some reflections on how this affects democracy. And, the first thing is that in Venezuela, and this is in general, oil revenues have supported sometimes democracy and sometimes authoritarianism. In the region, the evidence is that it's not that clear that oil causes authoritarianism. In fact, as the case of Venezuela showed in the 1950s and 60s, it could enhance in some situations. But the key is, what are the political institutions? And the political institutions of Venezuela actually doubled down, increasing the stakes of power even more than the fact that the country has this tremendous, powerful feature, which is controlling the oil industry, particularly through a national company. So it is very important for democracy in Venezuela that there are checks and balances and that the oil sector is well governed and not used, as Hugo Chavez did, as a political tool of the political party in government for patronage, to reward allies and punish enemies, et cetera, et cetera. So the current constitution has to be changed to have a viable democracy with more limits to power, but also in terms of a political transition that probably require some sort of pact, some of rendition of either punto fijo, whatever you want to call them, the democratic transition in Spain or in other places, that basically guarantees that that this is not going to happen again. The concentration and abuse of power that Hugo Chavez did. And also, of course, that avoids all these challenges of the political resource curse and the economic resource curse too, the volatility. And so this initial increase in oil production can stabilize the economy, can help Delcy Rodriguez get a more favorable rating. And if it's not accompanied by a policy of transition to democracy and these types of checks and balances, will not lead to democracy. And so the role of the US government, and of course the Venezuelan opposition too, has to play a role. It's tremendously important to avoid this growth period to lead to a bad outcome instead of a good outcome. And this is just to show that the history of Venezuela shows cases in which production went up and revenues went up and democracy went up and vice versa. But it's not a curse that can be said that played every time. Thank you.
Thank you so much, Francisco. Fantastic presentation. Particularly love the last slide with never seen the democracy with in that way presented. We're going to give the floor to Luisa Palacios, who is going to tell us a bit about financing and energy investments and finance. How do we do this, Luisa?
So I could not think of a better way to start talking about these kinds of issues than the floor that was set for me by Francisco. So Francisco, really fantastic presentation. So let me talk about. So I'm going to talk about two things. I think I just want to discuss the need for energy policy that goes beyond oil. And I want to also bring to the discussion a better understanding of the investment and financing outlook. And let me tell you why I think this is relevant. I do believe that for Venezuela to achieve its potential, the country needs to rethink and prepare for an energy policy that integrates oil, natural gas, electricity, environment, and climate as a holistic way to think about it. As Francisco said, this is not a zero sum. You can achieve some recovery, but in order to maximize Venezuela's potential, I do think that we need to think about all of these issues. What that means is that you have an energy system that has all of these elements, and there are things around the energy system that have to do with geopolitics, with security, with the environment and climate that you also have to be aware of in order to maximize profits, minimize cost, and so forth. And the other thing that I do want to start with is that the reason why I'm talking about this is because Venezuela might be very important also prior right now. So it's oil rich, but it is electricity poor. And this is due to gross mismanagement of energy resources. And the best case at hand, it's Venezuela's natural gas. So everyone talks about the 17 billion, the fact that Venezuela has 17% of oil reserves, but I think also very relevant for Venezuelans and for many reasons that have to do with longer term issues. It is the fact that it's also sitting on 70% of the natural gas reserves of Latin America. And that, unfortunately, right now is wasting about 40% of its production, either because it is being flared or is being vented, which is equivalent to an annual consumption of Colombia, which is really amazing. And so what I've seen about the energy powerhouses of the future, these are countries that not only depend on oil, but that can garner all of their energy resources, oil, gas, nuclear, whatever. That might not be the case for Venezuela, but it is the concept of moving that energy is not just oil. It is natural gas, it is hydroelectricity, and more important, the idea of electricity as an end use. So there are significant needs, as I think Francisco very clearly pointed out, but also there are very significant obstacles to mobilize those investments. And I'm going to talk about three. One that has to do with capital, the other one that has to do with institutions, and the other one that is about infrastructure. And so Francisco already suggested some of them. I'm just going to go a little bit more into the reasons why. So this is a graph that shows you what has happened to energy investments in Latin America. So energy, right now, the energy investments in the Latin American region are about $160 billion per year. That's a lot, right? And yes, more than 50% of the energy investments are in the fossil fuel supply. But the non-fossil fuel energy, and that you can think about hydroelectricity, renewable energy, grids, storage, other things that have to do with electricity equipment. That's the non-fossil fuel economy. That's also that's about 40 or 45% depending on the year, right? And so and what that means is that there is significant investment taking place in both sides of the equation because they need each other. You do need oil and gas, but then you need power and other things that make energy investments work. What I find interesting is that when I look at those energy investments in Latin America, 60% of the investments in the region are done by the national companies. And I thought was fascinating that Francisco brought the share that PDVSA or PDVSA controlled fields have in the country. And I think one thing that I don't think that we appreciate enough is the role of the national company, and particularly the role that it has over its own fields in the outlook of what's going to happen with Venezuela's oil production. Knowing that that $90 billion per year of fossil fuel investments that is pretty much taking place in a few countries. The bulk of it, again, is coming from the national company. So to me, and that I think has to do with one of the questions, Hector, that you were asking us to address. How does debt feature into this? I find it very difficult to actually for Venezuela to reach its potential without figuring out what the institutional framework for the oil industry is going to look like and what's going to happen with the arrears or the debt, defaulted debt that is currently in the oil industry by PDVSA itself. And so I think that's a very important part. I wanted to show you when we look about investments. This is a graph that shows the current oil and gas investments globally. And so Francisco pointed to a number, a big number of 100 to or 100 plus billion dollars in 8 to 10 years. So let's say that we believe that this is going to be 10 to 15 billion dollars per year of oil and gas investment globally that need to go now to Venezuela, because as I just mentioned, PDVSA's balance sheet is not what it used to be in the 1990s. So you cannot really count on PDVSA to be the one shouldering this investment. It has to be fully private sector led or foreign investment led. But this is what has been happening to oil and gas investments globally. It's about $500 to $6 billion per year. And so that's pretty much saying that 3 or 4% of global oil and gas investments are going to go to Venezuela. That is not impossible, but that's why when Francisco is talking about what is needed and the kinds of rules-based governance institutions that are needed, is because this is not just money that is floating. This is about capital allocation that the different oil and gas companies need to do, and they need to make these investments with clear conscience about the trade-offs that they have. In the Iran crisis and the war in the Middle East might change this a little bit, those functions, and clearly make Venezuela much more attractive. And it also might mean higher oil and gas investments. But I think it's at least important to realize where we are, so that we understand what is it that we need to attract. And so the other thing that I want to say is that why is it that we need oil and gas, private oil and gas companies or foreign direct investment? Is because we need their balance sheet. Because since Venezuela is in default and is a country that has really severe balance sheet and financial issues, you need to outsource that balance sheet financing. And the oil and gas investments depend on the cash flow of the companies involved. So when we think about where is the money coming from, it is the money that either you're going to raise in debt, somebody else, because you are in default, is going to raise, or the balance sheet that they're going to use. Which means, to the point that Francisco just made, that the 31 companies that now have a share or have now a piece of the PDVSA owned fields, if they don't come with balance sheet finance, if they don't come with this level of strength on their balance sheet, there's just not. It doesn't matter if it's in the balance sheet of PDVSA or it's in the balance sheet of some other company that has the same issues as PDVSA. No access to finance, no capacity to harness investments. So I think so that we understand what it takes. And so, and for that, and the reason why I do agree with Francisco's statements about how much oil are we going to get in the near term, it seems to me very clearly that yes, we're going in the next 18 to 24 months to something around 1.4, 1.5 million barrels per day. To me, that's where Venezuela was prior to the 2019 sanctions. That seems to me where this is going, in part because the oil sector is not monolithic. You have different actors. And as Francisco pointed out, the incumbents are the ones, the companies that have been in Venezuela for a long time, accumulating arrears. And the only way you're going to pay arrears is by actually exporting oil. In other words, the reason why there's incentives are aligned is because this is an informal way in which a debt restructuring is taking place, meaning that those that can produce oil, great, come produce the oil, and that you're going to be paid through the in kind, but in your by extracting and exporting the oil. And so that to me tells you that this is a very real economy or oil producer driven type of clearing of arrears, but it also tells me that there's incentives for that to happen. Now, once you've reached and you have cleared your arrears, and you have to then decide about what you're going to do with a more important increase in capex, because all of this, in my view, is just increasing spending at capacity levels. I think that kind of capital decisions needs much more visibility about what the rules of the game are going to be, what the politics is going to look like, what the governance is going to look like, and the institutions surrounding the oil industry as a whole. So that's in terms of the capital. In terms of the infrastructure, I think that we now are in a vicious cycle where oil production affects electricity affects oil production. And so to me, you are not going to be able really to solve or to maximize the oil production potential and to go above, to 2 million barrels per day or 3 million barrels per day until you've solved the electricity situation, because we're going to come as Venezuela recovers, the constraints that have been put by years of mismanagement are going to start to clearly be felt. And so these are just graphs that tell you two stories. The first one is that it's a way to explain the humanitarian crisis through energy. And so Venezuela used to have and that's the graph on the right, a level of consumption per capita that was way above that of Latin America, of South America peers, right? And so what we saw is a collapse of that energy power generation per capita. That collapse is due to, again, more supply than consumption, but the consumption graph tells you the same story. And the graph on the left, so that's a story of impoverishment. Any kind of recovery is now then going to, not only is welcome, but has to be accompanied by a significant improvement of then power generation in the country. The second thing is how actually the problems at the oil production level and at the refinery level ended up also having a significant impact on the ability of Venezuela to generate electricity. And so you have a thermal electricity sector that is operating probably around 20% of capacity. A part of that has to do with the collapse of the refining sector and how expensive it is to now use petroleum products in order for electricity, because you pretty much now are in a system where you have to import everything that has to, or a lot of your petroleum products, either for electricity or for diluent for production making, or production making. And then you do have ability to harness natural gas for thermal electricity, but there you need to figure out how you are going to recover the 40% that you're wasting or that you're venting in order to improve your thermal generation capacity, all of which is needed if you're actually going to recover oil production at the levels that we've been discussing. Thank you, Hector.
Incredible, Luisa. Thank you so much for picturing so clearly the constraints that are in the landscape for us to really kickstart to bring the oil production at optimum levels. Now I'm gonna give the floor to Professor Sari Levy she's gonna talk to us about the non-oil sector. Venezuela is sometimes a bit more than oil and beautiful beaches, though we do have oil and beautiful pieces of the Caribbean, but oil is a very important aspect. So I'm glad that we covered that very completely with previous speakers. Sorry, the floor is yours.
Definitely, there has been, I enjoyed very much the presentation, and of course, they take into account areas that I will not even pronounce given his expertise and the quality of the presentation. So let me try to speak a little bit more about Venezuela BP, beyond petroleum. And this is what I want to say, which means other sectors of the economy, but also means the other elements we've been talking about that they are so relevant, like the institutional framework. But before I begin, let me say the usual disclaimer that my comments do not represent or bind the organization to which I am affiliated. And saying that, let me begin. So, after 26 years of extractive and anti-market policy under the 21st century socialism, the narco-tyranny that captured the Venezuelan state was dealt a fatal blow on January the 3rd. So now we can say the transition has begun. And I'm convinced that we have reached a point of no return. And this is important when we are trying to attract investment, because if you are in a back and forth procedure or process, nobody will look you, with deeply and with confidence and trust. So the other element that we have to insist is that the collapse this regime provoked was not just socioeconomic. It was a total institutional meltdown. And this was what threatened the hemispheric security. So that's the reason of what happened on January the 3rd. And we have Venezuelans and the United States has strategic objective that I can say they align perfectly, which are to dismantle this criminal repressive structure and replace it with prosperity, democracy, and peace. So for that, we developed a roadmap, a plan we called Venezuela Tierra de Gracia, Venezuela Land of Grace. And it is more than a government program. Actually, I would say it's a new social contract rooted in freedom that has three unwavering pillars. First, free development of the individual, prioritizing human dignity. Second, a subsidiary state redefining government to serve the citizen. And three, a free market economy with a robust system of property rights and an enabling environment to drive innovation and productivity to eliminate poverty. So for stopping the bleeding without triggering a recession, we developed what is so-called the expansive stabilization program. And the stabilization side demands moving from a state-controlled disaster, let's say, to a disciplined modern economy. And what are we talking about? We are talking about the optimization of the size of the state. We are talking about eliminating parallel structure and removing the burden of nearly 1,000 loss-making public companies through a transparent and competitive privatization process. Second, we are talking about monetary sanity. We are talking about restoring the independence of the central bank, forbidding fiscal deficit monetization, and of course, adopting an inflation targeting framework. We are talking also about a bimonetarism exchange system, giving Venezuela the freedom to save, contract, and pay, not only in the Venezuelan currency, the Bolivar, but also in any currency of the world, which will be basically the US dollar. And fourth, and I would say last but not least, because it's very, very important, is restructuring debt and gaining, of course, multilateral support to address the humanitarian crisis with a robust macroeconomic plan, but simultaneously a very important infrastructure investment plan. So this is not just about balance sheet, it's about a massive infrastructure investment plan to be advanced, to restart the engines of production, but to be done with private investment, not only about, this is not a program based on creating only new debt, which will be, but it won't be the only source of funds because it won't be possible. And there is the second area, which is the expansive dimension. And here is we have to recognize that the Venezuelan economy shrunk by 70%. So to recover, Venezuela not only must be stable, but must grow at significant rates and for an important period of time. And we understand that this is ambitious, but achievable because actually we are sitting on the largest dormant upside of our hemisphere. And I can say we know what can happen in oil and gas, and as Luisa also said, all the energy sector. And the energy by itself, what it means, power, hydropower, is a very important element to be not only recovered, but expanded, because this is something that is a key issue for the looking forward economy that we have in this 21st century. When we speak about recovering the hydropower system, we are not thinking only on heavy industry. We are thinking, for example, that we have a capacity installed of 64 gigawatt of hydropower, and nowadays we only can have 17 of those gigawatts. So with a great process of investment and maintenance, you get to those 64 gigawatts only with that. And so you can offer the energy density required for, let's say, new tech frontier like AI, data centers, crypto mining. And that will change the face of what we think when we speak about the energy hub of Venezuela. But of course, if we recover that, we will be able also to support the heavy industry. And nowadays, when green, let's say, green advantage is so relevant, in the South, we have a unique multifactor because we have rich deposit of iron, We have mighty rivers, we have proven know-how, and a geostrategic location if we want to produce the world with green steel. But of course, we have to recover the energy, the hydropower that we have there. If we look at two other areas, like for example, we have 2,700 kilometers of pristine coastline, a wonderful and exuberant nature. There is no brainer in thinking on Venezuela on tourism. But also we have millions of hectares of high value agribusiness niches like cacao, coffee, spirits, tropical fruits, even aquaculture. Naturally, if we are investing in infrastructure, we are supposing the project is to give, ports, airports, and railroads into private hands or to be managed by private sector. So this is the kind of change that we are envisioning for Venezuela, in which the private sector will be the real motor of the country, not the state. Of course, when I began my intervention saying that we are in a transition, and actually we have 2 months in this kind of new transition since January the 3rd. And we know transitions are inherently unstable. The US guidance provides some kind of, let's say, shield of legal certainty, but this guidance and grand economic plans, as the one I have told you about, are not enough. And if we want to be successful, of course, we still miss some critical elements. We need legitimacy, and this transition must culminate in a flawless electoral process. We need justice, because there is no peace without justice, and with no peace, there will be no possibility of good life in a country. We need security. The US support is temporary, but we need long-term success that requires military understand that they have to commit their loyalty to the Constitution and the people of the Venezuelan society. We need transparency, because we must ensure that ill-gotten gains do not infiltrate the new system, because we don't want a new class of crony socialist oligarchs like had happened in other places. And of course, again, like a key element, we need a robust institutional framework. We're talking about rule of law, separation of powers. We're talking about check and balance, control of corruption. And this is only could be achieved through a free and democratic society. Because if not, long-term perspectives are really fragile. So I'm sure that when you look at Venezuela, you know Venezuela has the resources, natural and human. Let's say that we have also a plan, Venezuela Land of Grace, and we have a recognized leadership embodied in Maria Corina Machado. And finally, we have the opportunity. But we need to transcend from this moment, which is an unstable transition, to a very robust system with an institutional framework that will attract those investments we've been talking about. It won't be immediately, but it will create in a very short period of time, and I'm talking about a decade or 15 years, a very sustainable process. I would say that even the most promising economy in the hemisphere. So yes, we need some robust fundings to unleash these possibilities.
Thank you, Professor Sari. It's been a great conversation and very complementary perspectives. I'm gonna start asking some questions to our panel. I'm gonna start with Luisa. Luisa, you described a very interesting ecosystem for how capital gets allocated these days in oil and gas. We know that the oil sector is oversupplied at the moment, and the big players you're describing are probably not going to have, since according to what we hear, they're not going to have the incentives to relocate these massive amounts of capital to Venezuela, those that are needed to bring production to 3 million. what should we expect then? We've heard what. So my question is, what type of factors you see entering into the Venezuelan market in the next couple of years, and what's the ceiling that you envision for the investment that is actually going to happen?
Thank you, Hector. I wanted just to put that graph so that we understand what global oil and gas investments look like when we think about our, the needs, the investment needs that will get Venezuela's oil production flowing to more than 3 million barrels per day. So I think it's just good to understand the landscape. That said, I do think the Iran situation increases the geopolitical advantage of Latin America and the rest of Venezuela and Latin America. Venezuela looks different at $60 per barrel than it looks at $80 per barrel. We do need to understand that you're making capital allocation decisions based on analysis of also risk. And the price is really important. The thing is that we don't know in reality how this is going to play out and whether this is going to be solved in a few days or not. And so it's too soon to be saying anything determinate. But what I do think, and I go again to the point of natural gas, is that what this crisis brought to our attention is that natural gas is a choke point as well, and that depending on that share in Qatar might move people to think a little bit more about maybe developing other natural gas resources. And so what I'm seeing is that this is super positive for Argentina, and the projects that Argentina is going to FID in the next months are going to get FID. And it is such an opportunity for Venezuela because it has a very, very compelling project that is an LNG-driven project, and there could be much more to come. The thing about oil versus gas is that the rents that you get from oil are much more compelling than the ones that you get from natural gas, which is why the national companies in the region go for oil projects and not natural gas projects. And I can tell you from experience with the refining sector, the refining sector is a low margin business, and therefore any kind of problems that you have with profitability, you have to be very efficient. Otherwise, any kind of problems show up in your balance sheet very, very soon. The rents cannot mask the inefficiencies. Natural gas is a much more profitable type of industry, but it's not the same level as oil. So you have to be much more. You have to be much more market oriented, private sector oriented, because it's a huge amounts of upfront capital investments. And so as you move in the value chain from oil to natural gas to electricity, you actually have to be more rules-based, more private sector-oriented, because the risk profile changes and the rents and profitability changes. And so I just point all of that out so that we understand that capital can be attracted. It can be attracted to significant levels, but that you need what Sari was saying, what Francisco was saying, very clear institutions, rules of the game, contracts, the infrastructure and ecosystem for private sector to feel confident that the 20-year, 10-year, 20-year horizon that they need for their investments are going to take place in a safe environment.
Wonderful, wonderful, Luisa. So it's a comprehensive solution, the one we need, and it's not just taking small pieces. I want to turn to Sari. Sari, I know you've been talking to many economists in the last 10 years, well, your whole life, but in the recent years, to think about these comprehensive solutions, right? About not only the oil sector, but also some of the other dimensions of our huge economic challenge. We have massive debt, 190 billion, according to some estimates. And we have around 90 billion GDP country. So the debt GDP ratio is near to 200%. And we also have, on the other side, this migration crisis has produced significant demographic changes. And then we have the institutional problem and the electricity problem. So how are we? What's the sequencing of dealing with these economic challenges, but particularly focusing on the constraining effect that debt can have in unleashing the growth that you described in your presentation?
Well, definitely that is one of those bottlenecks that we have to tackle, but it's not the only one. And why do I mean with this? We speak basically about financial debt, but we forget all the kind of debt that we have inside the country in terms of health, security, education, and as you said, a huge migration. So the debts accumulated during these 25 years has been in all the dimensions. Particularly in the case of the financial debt, definitely the best way to deal with that is through multilateral organization. And I cannot tell you that it is ready because there is not a recognized government to send a person to speak with those institutions. But we are deeply sure that having the situation of the country, having the possibilities that this organization have, we can manage to go, to restructure and to renegotiate it, but also, as I said at the beginning, asking for funds to attend the humanitarian crisis. But it's not only giving money, it's the way you manage to give the money to the people. And this is something very important, because the moment you act with the people in a different way, you can simultaneously stimulate the economy. It's not the same, for example, that I give you food, that I give you the money so you can go to the market and buy it. In the second step, in the second way, you simultaneously are activating the economy. And this is very important because we also have to realize that there is a change in the cultural analysis nowadays we have in Venezuela. There is a very important, culturally speaking, change in the country. And people want to see also a different way to deal with the state. What I can tell you is that there are many, many opportunities and there are many bottlenecks, but each of those bottlenecks can be turned into an opportunity for investment too. If you manage to see the economy as a place for private sector and not everything managed through the state that we know is bankrupt in this moment. So this is my...
Oh, thanks, Sari. Francisco, for some people, the U.S. is unquestionably a key player here, and they seem to have the only tool some remnants of the regime seem to pay attention to, and I guess that the opposition is walking a narrow corridor here. They cannot, so they have to also please the administration in their stability and recovery plans, so they cannot create the type of pressure that would consistently push towards democratic transition. But then what you could end up having is just authoritarian stabilization, right? So I guess that my question is really, what are the ceilings that you see under the institutional framework that the current autocracy is able to create? And if you think that that ceiling is so low that recovery is not actually gonna happen with that ceiling. I don't know if the question is clear, but I guess the core of the question is some people are expecting that structurally the recovery phase is not going to happen without substantial political change, and that's going to induce the US to finally help us push for those reforms and not only conform to autocratic rebalancing. What are your thoughts on that?
Well, as you know, it's hard to predict. There are different sort of positions within even the U.S. government in terms of how fast to transit these sort of different stages, and what are the sort of the postmarks or the things that they will have to evaluate to move in one faster or slower. And I think the Venezuelan opposition, as you point out, in a difficult they are in a difficult position, but they should be a very important actor in pushing for this transition to happen. I think, even though from the perspective of the long-term development of the country, this is not enough. I think we have to realize that the Venezuelan economy is tiny, and any increase in oil production and availability of funds from, say, some of the multilaterals or the gold, etc., will lead to some significant increase in the GDP, but also in stabilization of the currency, etc. Of course, it depends a lot on how the U.S. decides to manage the funds, the revenues that are generated from oil exactly. But you can see that even though still the flows are not that significant, there is already a change in expectations in the Venezuelan private sector. I think in some cases even exaggerated about the potential. But let's imagine a growth of 20% in growth in production, say this year. You will have a significant rebound from a tiny economy. I mean, the Venezuelan banking system is tiny, is even tinier, for example, than the economy. They are likely to recover significantly and offer some credit to a country that has been starved of credit. So I think that could lead to some support for the regime. Of course, some of the credit will be taken by the U.S. government because people realize that they would have not done it without the pressure of the U.S. government. But I think it's important to realize that. And of course, the country needs to understand that going from a tiny economy to a slightly less tiny economy is not what we should aim for. This is a country that has tremendous potential, that could be one of the, again, wealthier countries in the region, not only because of the massive potential in hydrocarbons, but because of many other attributes that the country has. And by the way, I think the Venezuelan diaspora, even though, of course, it was a big loss for the country, it now represents a tremendous potential for growth, because these people have capital, these people have knowledge, they have developed businesses, and even though many of them will not return, they could, and diasporas over the world have shown that they could really be instrumental in developing the country. But none of this will happen without transition to democracy and without building the institutions required for that. And I think that's the important message, more than the first year of stabilization. It's to really aim for that. I mean, the people who got us into this disaster and mess that basically destroyed the oil sector and that reneged on deals for 25 years are unlikely to be the ones leading us out of the hole. But on top of that, the country wants change, and the investors need change and rule of law. So everything in the end will hopefully point to that direction.
Great. No, and I love that when you talk about the pact that we need to do, is not the pact among parties. Is like to deal with resource nationalism. You really need a social pact. Yeah. It's a change in narrative, identities, and the way in which we think about the resource, right? And it's that seemed, I agree with you that the ruling coalition seemed unable to reach that far-reach consensus, social consensus. We have some great questions on our Q&A. Let's get to them. How can Venezuela as a country efficiently recover on a massive scale in order to promote political stability and the economic role of society without relying only on its oil energy resources? I appreciate the question, because I think that what's underlying is how, if things go well, how do we make the same mistakes we made in the 20th century, which was depending completely on oil and then also having that dependency ruin our political system? Who wants to get this question?
Well, I'm sure that both Sari and Luisa will have a lot to say, but just briefly, that's incontrovertible in the sense that Venezuela cannot go to the levels of wealth that it had before just with oil. Not only because we are in the middle of an energy transition that eventually will lead to a reduction in demand, but also because if you analyze it in per capita terms, we will never reach the levels of production per capita that we had, during the 50s or the 60s when Venezuela was a wealthy country. And even if you add the natural gas potential that Luisa mentioned, it's still hydrocarbons are not going to get you there. And so, as you point out, we have a tremendous challenge, which is taking advantage that these types of sector really will be able to attract capital because they have very high returns, and even in sort of relatively high risk environments, some of these investment will be attracted. So this will be the initial push, but we need to create the basis. And I think Sari explained a lot of the elements in her presentation, and Luisa on the financing to do to grow significantly in other sectors. Otherwise, we will be much better in much better shape than we are today, but we will fall in the same kinds of issues that we had in the past and will not fulfill our potential.
Absolutely. I think this connects well for a question that was posed for Sari. Assuming the transition to democracy is possible, what is key so that this time around Venezuela is less is less of a monoproducing country and a more diversified economy? What are some of those concrete strategies, Sari, that you and others have envisioned to avoid that we fall again into the resource trap?
Well, I think that they have, beside all the elements that we have said about the institutional framework, there are two elements that has to be, advanced more deeply. One is to create those firewalls that I call that way, that avoid the course of resources, that this kind of, when you have a boom in prices, you have this impact in the economy, you get overvaluation of the currency, you create a different kind of dynamic that makes that the rest of the economy cannot overcome these kind of things. And there are many lessons that we can learn from other countries to avoid these things, but simultaneously to create an environment, an enabling environment for private investment, not only for oil, not thinking on Venezuela on oil, but on a diversified economy means create an enabling environment, and that is more competition, more transparency, streamlining bureaucratic procedures, making things faster, cheaper, understanding how tax work, not only for oil, but for the rest of the economy too. So if we forget about the rest of the economy, of course, we will not have that other part of the economy and won't be able to boom. When we speak also about the energy hub, and we are talking about recovering hydropower and that possibilities, we are not thinking about using it only for electricity, but as I was telling you, for new tech industries like data mining or AI, and that creates another kind of economic productive activity that you may follow, and maybe in the following half of the century, we will be thinking about Venezuela not on oil, but on energy of AI. So you create a new ecosystem of productive, in this case, of services.
For things, no, absolutely. And I think we have a question from Yanixa Guerra here, who asks us about, some parallelisms with the Panama case. In the Panama case, the whole autocratic regime was dismantled. In the Venezuelan regime, only the top of it was taken away, but the rest is still in place. How can the allocation of capital be viable for oil and gas projects, I guess, in Venezuela if this remains to be the scenario? I think it connects to many of the things we've been discussing, right? Without profound institutional reform, we won't see those allocations of capital. But I would like your reaction to that question, Luisa.
Again, as I mentioned, the oil industry is not monolithic. You have different actors with different kinds of risk profiles, and even in these circumstances, I see oil investors, very short term, short cycle type of investors, willing to come to Venezuela and. Because they have operated in other places, because it's not the kind of investments that normally occur either in mining or in conventional oil and gas, which takes just longer cycle type of investments. But those are the ones that get you to 3 million barrels per day. Those are not the ones that get you. So that's why I think yes, you could see that investment, and I think Francisco laid out very well. There are going to be investments happening. There is going to be a recovery. There is going to be increases in oil production. We should be all very aware and glad that we are having a stabilization for the Venezuelan people. The thing is that you're my sense is that you're going to start to get into like really physical, infrastructure constraints, capital constraints, human capital constraints, very, very rapidly. The other thing that I think we have not discussed enough is that the period of nationalization and expropriation that took place really destroyed the non-oil economy. And so to me, that means that the process of reconstruction is humongous in the non-oil economy. But that is the place where I find the opportunities, particularly for the diaspora that Francisco was mentioning. The diaspora is the one that is going to help with that. Yes, you might have other investors there, but the kind of risk investors that will take positions in oil and mining might be very different if this is not an export-oriented sector. Having investments that are local, domestic, that are in local currency, much more difficult proposition, which is why when I teach financing of the energy transition in emerging markets, that is the issue. You are financing a deglobalization of energy markets. And so you are financing energy that is no longer export-oriented into a local, domestic type of thing. And that brings about all kinds of issues of capital cost, of risk premium, both are real and perceived. Who takes those risks? It's the diaspora. And so you are not going to solve this without the diaspora, and the diaspora, in my sense, because they're going to bring capital and know-how, and because you're not going to need human capital to rebuild the country. You should be happy about that. So the thing is that this is why you need another kind of government, a shift in the way you think about society and the productive role that everyone has. And so because one of the reasons is that one of the rationales for this process was also to address the mass migration and the refugee crisis that occurred. This has to be part of the way you think about the success of the policy, right? If you have a repatriation and if Venezuelans go back with their capital and with their know-how and an entrepreneur spirit.
I am so grateful to the three of you for this great conversation. I think many takeaways to walk away from this session with. The first one is that there are no shortcuts. The collapse has been so massive that the solution is really, it touches many variables and dimensions, and you're really going to need a whole societal effort to rebuild it. The second key insight I think I live with is autocracy can get us to this current form can get us to a very low ceiling of stabilization, and really recovering our full potential to be a responsible and credible partner in the region is going to require a process, social, political, that oversees what the remnants of the regime can accomplish. I really want to walk away with that. I'm grateful to you and to our audience for coming and getting connected. And I am warning you that next Friday we're going to have a third webinar on this series, which is going to focus on the security sector reform, which might be really the bottleneck of the transition. And again, so grateful to all of you. I hope to have you at Stanford at some time next year, Luisa, Sari, and Francisco. And please, let's keep thinking about these problems and sharing so generously your knowledge with everyone.
Thank you very much.